My name's not Marlene, and I don't know a damn thing about clean pools. Okay, my name is Mindy Fellman. Most of you know me, maybe one of, or two of you don't. Um, so I'm going to ignore this gentleman over here. And so just a quick, we'll go through a quick introduction, me personally, my clients, insurance vocabulary. Some of you may or may not know because LaDonna said, please let us know exactly what we're talking about. Marketplace discussion, the worst day of your life, and how I do it. Okay. Um, so I worked for corporate America for over 20 years. Retired from AT&T Lucent and Avaya. Moved down to Florida to be close to my sister, and uh, got involved with USA Benefits Group as a customer care person. I really didn't want to do it, but I figured I need to do something to keep me busy down here. So I went to work for them, and then I saw in the office they had a independent agent, and I saw what she did within a year. So I went and got my 215 license, and that enables me to sell insurance, health insurance, life insurance on my own, anywhere I want. In the United States. So that's what I decided to do. USA Benefits Group is a brokerage. They have over 37 different companies. I am not locked into just one. I do both marketplace and private insurance. I do Medicare supplements. I do not do Medicare Advantage. I work with somebody in the company, and we also have somebody in my group, in our BNI group, that helps us also with that. Uh, I've got dental insurance, vision insurance. I have life insurance. So whatever you need, I educate my folks. I don't threaten them. Whatever you want, if that's good for you, if it's not good for you, I educated you, and we go from there. Oh, and I'm licensed in many states: Colorado, New Jersey, Tennessee, Texas, um, Florida. I've got somebody that reached out to me in Minnesota and Missouri, so I will get my license there as well to help them. So anywhere that I'm needed, that's where I go. Okay, so this is me personally, because we do it in our me and I am just showing you a little bit about me. This is my life, my cats. That's the only man in my life, and that's how we like it. This is Jackie. That's Sammy, and that's Cleo. Okay, enough about the cats. Okay, a little more about me. This is my dad. He was a prisoner of war in Germany. He was emancipated and at 19, and he was 6'2" and 98 pounds. Love my dad. Then he opened his own shoe store, Norm Fellman Boot Tops. My mom, she was a nurse. She was also the sex ed teacher in high school. That was fun. Um, my twin sister and I trying to get my mom drunk on some vodka. And then we cut her head off, but that's okay. I'm also, Winnie and I, my sister and I are also adopted. And we found our biological mother and a half brother. Okay, my client. So here's just an example of what I've done. I found a client in Winter Haven. He has his own business. His wife used to work for Walgreens or somebody like that. Well, when she retired, they gave her a Cobra plan. He was paying $1,500 to $1,600 a month just for the health insurance. And then for his meds, he was paying more for that. Once they came down to an open enrollment period for them, I talked to them, and I was able to save them money, and I got them on a marketplace plan. I also got them on an accident plan, accident and critical illness, to take care of the gaps that are in the marketplace plan. This gentleman this past year, fell and broke his leg. That accident plan came in handy, and it paid that $10,000, that max out of pocket that he had. So they were mighty glad they had that. Okay, how many of you have life or health insurance? Okay, I know you have it. Okay, why don't you have it? Okay. Do they offer you health insurance? That's not health insurance. Okay. You can have Aflac and a health insurance policy. Okay, I'm going to tell you. I received a call from Morton Plan Hospital. They, for some reason, now got my name, and they're sending me people that have come into the hospital, and now they didn't have health insurance. I got a couple. He's 61 years old. They don't have health insurance, and I said, "Why not?" Well, we're healthy people. Okay. The man just had a heart attack. There's no place for him to go now except for the marketplace. And he will run into an issue because they make a lot of money where their premium will be high. Don't wait for that day something happens to you because you can't afford it or you're healthy. Okay, who has car insurance? You don't have car insurance? Ms. Lawyer? Everybody's got car insurance, right? Why do we have it? Okay, but if you didn't have it and you're driving around and you get in an accident, then what happens? Same thing with life insurance or with health insurance. Okay, you need health insurance. Okay, I wanted to go over some vocabulary. There we go. Everybody knows what a premium is, right? You have a monthly. It's what you pay monthly for your health insurance. Okay. Does everybody know what a deductible is? Okay. It's what you pay out of pocket. Some plans say, can you see? It's over on the wall there. Some plans have a deductible and a max out of pocket. If you have a deductible, there's some place in your insurance policy that says hospitalization. Once you meet your deductible, you're going to pay 40% of what that hospital bill is. Or it could say that you're going to, once you reach your deductible, you don't have to pay anything. So it's in that fine writing that you'll see what you owe. Okay. Copays. What are copays? Everybody know what a copay is? Okay, you go to the doctor's office. Instead of paying because you have health insurance, when I look for a plan for you, I'm always going to look for a copay. I'm not going to look for something that says max out of pocket or meet your deductible first, except for the one of my plans. But I'm going to look for a plan that has a copay. So you go to the doctor, and that your copay is $40. Okay, to go see the doctor. That's all you pay. Your co-insurance. You share the cost of meeting your deductible. So once you've met your deductible, you've got a co-insurance to pay. It's that 40% that we were talking about. That's what your co-insurance is. Your maximum out of pocket. I tell people this all the time. If you had a heart attack, you have a maximum out of pocket of $9,000. The hospital says, here's a bill for $100,000. You're only responsible for reasonable and customary charges up to that $9,000. Got me? With me? Your network. It's a group of doctors that have agreed to be in a network with this plan, and it agrees with what the plan is going to pay them. So for your copays and for anything else, you want to stay in network with your doctors to get the best bang for your buck. Okay. Your formulary, it's the list of drugs on your plan. Generic drugs, usually most of them are always covered, and generic drugs, it depends for your blood pressure, for heartburn, for cholesterol. 12 bucks, I think, is what you're going to pay. And you've always got Good RX if your drug plan on your health insurance plan is too high. You need prior authorization. If you're going in for a hip replacement, you're going in for knee surgery, and you know this is something you need to get prior authorization before you can have that surgery. Otherwise, you're going to get stuck with a large bill. Special enrollment periods. If you ever hear me say the word SEP, A special enrollment period. You had a baby, you adopted a baby, you got married, you got divorced, you changed your where you live. Okay. Those are how you can change in the marketplace your plan if need be. Okay. It's November 1st through December 15th is when you sign up for your health insurance on the marketplace. So outside of that period, you have to have a special enrollment period or a SEP. And the last thing is the marketplace. It's ACA online shopping mall for health insurance plans. It does not cost you anything to work with a broker. It does not cost anything. My payment comes from commissions from the company once you sign up. And I'm going to put you on the best plan, whether it be private or marketplace. I don't look at what I'm making, I'm looking at what's best for you. Okay, there's actually 5 different buckets for health insurance. You've got Obamacare or ACA or the marketplace, okay? They cover the 10 essential health insurance benefits. It allows for pre-existing conditions. You recognize the brands, Florida Blue, Oscar, Ambetter. In theory, that covers catastrophic. Okay, those are the pros. The cons could be very expensive, like this year. Require out-of-pocket dollars first. Okay, you're restricted, narrow networks, and limited options. If you like to travel and you're going to Georgia, if you're going to Colorado, your marketplace plan will only cover an emergency. Okay. Um, we have what we called short terms. We used to have short terms and they were allowed to have 3 years. Then the government came in last year and said no more short terms. And then along comes Trump and Trump says, "Okay, let's get the short terms back." Okay? So a short term, they're more affordable than the ACAs. They have high deductibles. Okay, familiar structure to ACA plans. They can be an effective bridge. So if you're without insurance in October and you can't start a plan until December, but you don't want to be walking around without coverage, we've got a short term, God forbid something happens to you. There's a variety of carriers and options. So I've got Allstate, I've got United Healthcare, I've got a company called Pivot that I can put you on. Okay. The negatives can only be written for short periods. Well, now it's up to 3 years. Not all states allow them. You need to qualify based on your health, and the future with them is sometimes uncertain. We have something called health share ministries. There's 2 that I work with. One is One Share, and the other one is uh, MetaShare. You can't drink, you can't smoke. If you swear, just don't tell anybody. Um, these are good plans. Uh, you don't have to prove you go to church, but they're ministry health share ministry plans. You share in the responsibility. So if you get sick, money is pooled through all the premiums, and they take a piece out of that to pay for your incident. You know, if you're in the hospital or anything like that. I do like One Share. It acts a lot like a major medical that has copays, but it also has a deductible. And if something major happens to you, you reach that $10,000 deductible, and then anything over that, they will pick up, but you are responsible for $10,000. In which case, I've got something that covers that. They have the feel and look like ACA plans, like I mentioned. They're more affordable than ACA plans in some particular instances, and they will be this year. They have a sense of community and they're faith based. There's a variety of carriers and plans. Here's the negative health sharing, it's not insurance. Claim coverage not guaranteed. Need to qualify based on health and finding the right organization. Okay, like I said, I do like the One Share. This is a new one, and I have quite a few clients on this plan, and it's called defined benefit. Okay, it's a defined benefit. It's a fixed indemnity. Lost the word. This plan says you're going to the doctor. Your doctor is in network. The doctor is going to charge you $175 for that visit, but because the doctor is in network, you're going to get a discount. So that doctor is going to discount you $75. The plan pays an allowance of $125. You only owe the doctor $100 because you got that discount of $75. The plan pays you $125. You got $25 going back in your pocket. Okay, it pays for your doctor visits, for urgent care, for hospitalizations. If you're in the hospital for days, it pays for that. So it's different. People don't know it. It's most plans are for healthy people, so you want to be healthy. Pre-existing conditions on this one has a year before they will cover it. The one share plan, 2 years before they will cover a pre-existing. Here, we don't want any pre-existings. Okay? Anybody have any questions? Am I putting anybody to sleep? Because there's a lot about health insurance. Yes, LaDonna.
I actually have a question. So if you meet your out of pocket minimum, do you have to pay the copays anymore?
It depends on what plan you are. If I'm looking for a plan for you and it has a deductible, I'm going to make sure that your plan has copays. You don't have to worry about reaching a deductible.
If you hit your max out of pocket, you still pay your copay.
No. Well, no, let me take that back. I've never had that question before. I'll check that and get an answer back to you.
Well, and are there certain ones that are better for like mental health type care than others?
Marketplace is the best place for that. And if I know that that's important to you, I'm going to make sure that I look for outpatient therapy that has a low copay. Okay. Any other questions, Ms. Carey?
Green bucket. So at USA, I worked for them for a long time, and they would always describe, because they didn't do profit sharing or whatever, they would always describe that everybody's basically putting their premiums into. That's how they started. Officers pull together, put their money in a bucket, and that's what goes to pay the claims at the end of the day. And that's how insurance carriers work.
Yes.
You put your money in, and that money is essentially what is their ability to pay out claims. So why is that saying health sharing but not insurance? Isn't that the whole like?
It's not insurance. It's not considered insurance.
It does the same thing, right?
It does the same thing. I don't need a license in every state to sell that. It's not insurance. It's coverage, but it's not insurance.
Is that because the claim coverage isn't guaranteed?
Correct.
So it's kind of like they vote on it? Whether
They look at it and see what it is, and yeah. But they're paying more of their claims than they ever have before. That used to have a bad rap, but now they're getting better. I have a couple clients on that.
Is one of these buckets similar to like the accident plans, or are these all?
No, these are all just. And by the way, the indemnity is not health insurance. It's not major medical health insurance. Okay, major medical health insurance. It's got most of the essential coverage. Your essential coverage being your pregnancy, and a bunch of other stuff. Okay, let's talk about the marketplace. Some changes coming up. Enhanced subsidies may expire. Okay, the COVID era enhanced premium tax credits are due to expire December 31st. During COVID, we had all these people that were sick, and so they had to do something to help us. So they gave us large tax deductions, and they said what your income was, and that's where you got your tax credit from. Okay, If they're not extended, out-of-pocket costs could double for most of you, like our Wendell here, okay? You want to review your marketplace plans if you are on the marketplace. You don't want to let it roll over. You don't know what you're in for. There still may be something we can do. We either take you out of that and put you into a private plan if you're eligible, where the cost is lower. But we will work for you to make sure that we find something for you. Your year-round SEP. One of the things that I was able to do, if you made between 100 and 150% of the federal poverty level, I could get you in no matter what time of the year it was. You're one person, you're making $16,000, you're making below the poverty level, I can get you in, okay, any time of the year. They're taking that away. Everyone must enroll between November 1st and January 15th. It's actually December 15th, unless they have a qualifying life event, okay? Increasing premiums. Our national trend, premiums are increasing across the board due to rising healthcare costs and the potential expiration of enhanced subsidies. Here in Pennsylvania, Pennsylvania is a state-based exchange. Their costs are rising 21 to 22%, okay? Florida impact, while the state-specific numbers are still rolling, so we still don't know exactly what they're gonna look like, similar increases are expected, okay? This is what you've been asking for. This is the 2025 going into 2026 federal poverty level, okay? If you are two people and you make here's 400 and you make more than $84,000 a year, you are making over 400% of the poverty level. You expect your premium tax credits to go away. Okay? Does this make sense to everybody?
Where's the cutoff where they don't? You know that?
So here, if there's two people and you are making, let's go to 175, $37,000, you'll find a tax credit. I don't know how much, but you'll get a tax credit. 37, that's 170% for two people of the poverty level. Okay? And this is annual income. In the 48 contiguous, thank you.
So the poverty level for two people for next year is gonna be 150, is that what I'm saying?
Yeah, so that's between 100 and 150%. Normally I could get you in if you called me today and said, Mindy, there's two of us and this is what we're making. I could get you in. Going forward in 2026, if it were April and you called me, I couldn't get you in. Okay, and they're going to be asking for more proof. They want to see what you're making, so you're going to make sure you need to get your taxes done. Okay. This is big for teachers and for people that have a spouse that is employed and is offered group coverage. If you're offered group coverage, you cannot get in the marketplace, okay? Unless you fit the family glitch. And there's a calculator that talks about it, okay? This tool estimates to see if your family members may be eligible for financial assistance outside of your employer determination, okay? You put in what is your approximate annual income for your taxable household. Please choose the drop down how often your employer collects health insurance contributions. Does it take it out every 2 weeks? Okay. Enter your state required contributions per paycheck. Okay. And then your required contribution per paycheck to purchase the lowest cost family health plan. You hit the calculate button and it tells you whether or not you're able to get onto the marketplace, even if your spouse has employee sponsored insurance. So we can always try this if it costs too much to put your family on employer sponsored insurance. With me? Yes, ma'am.
So if you're a veteran, do you not qualify for the
No,
marketplace,
you do not.
even though your family isn't covered under the VA?
Why aren't they?
If you're not at 100%, your family's not covered under the VA.
I think it's either the marketplace or VA. You can't have both. I think I need to find out about that. I don't work with any veterans right now, so I would have to find out about that.
Yeah, so I'll have full coverage because I think it's like 75. Once you get over the 75 limit, you get full coverage for the rest of your life. But until you reach the 100, your family doesn't have coverage. If you reach 100, your family, like my spouse and my kids would have it, but until then,
100 what?
100% disabled
Oh,
through the VA.
okay.
These are like disability percentages,
Okay.
and it's very hard to get to 100%.
Okay.
So
I would have to find out about that. My father was VA benefits all the way. I'll find out. Okay. One of the companies I deal with is called Oscar. I love Oscar. Um, this is showing that the premiums are going up. So a male, 24 years old, he has a silver plan. Silver plan is great because you get lower premiums, or sometimes higher premiums, but lower copays, and it's easier. That plan is going from $23 to $34. Not bad in that one. I have a female who's 62. She's on a silver plan. Her plan is going up. Excuse me, it's going up that much, $34. Okay. 62, so tack on another $34. Here's a female, she's on a bronze plan. Her plan is going up an additional 124. Okay, so you can see here, my female 42 bronze plan, $100. It's going to go up an additional $178.
That's what income level and with credits.
These are with credits this year, how much they're going up. I don't know what the credits are going to be for next year, but they're anticipating this is what they're going to look like. Um, they're all in that they're under 400%. So we're looking be probably up to 200%. Yeah. Okay, all my options. I'm like I said, I'm just not one company. I've got many different options. So if you're looking for a defined benefit plan, if you're looking for a short-term plan, these are the companies that I work with. If you're looking for gap plans, like you were talking about, you said the word that I won't repeat, but I have plans that cover you for accidents and for critical care. That's the other thing you want to think about is, do you want to pay at the end when, God forbid, that something happens to you, that large amount, or do you want to pay those small increments to make sure that come that day you're covered? Okay, I have plans to do that. Our health share ministries, our critical illness, specified disease, your heart attacks, or your uh, uh, arrhythmia, anything like that, we've got it. Accident plans, dental plans. I've got some great dental plans, vision plans. MEC is a plan that a minimal essential coverage. Okay, it just covers the minimal essentials. I've got prescription drug RX plans, Medicare Advantage. Like I said, I don't do, but I work with somebody who does, and life insurance. I have a ton of life insurance companies. Yes, ma'am. Yes, I do. Yes, I do. Okay, this is a company that I was talking about the other day when I was doing my presentation for BNI. This is a new concept. When you enroll in this company, you kind of become an employee of this company. Okay, what they're doing here is there's this large group, and they're doing research on your health. Are Are you taking vitamins? Are you going for a walk every day? Questions and surveys like that, okay? You have to take 4 surveys throughout the year, and they pay you to take those surveys. You'll get a check, and it's like $40 an hour, but this survey is 15 minutes. They're going to give you a piece of that. By the end of the year, maybe you make $100, and then you get a 1099, okay, or something like that. That enables you to be on this plan. This plan is like a major medical, but this plan says you have to reach your deductible before the copay set in, okay? This deductible is $250, okay? Once that deductible is hit, you've got urgent care support. You've got mental health on this one. You've got, let's see where we go. Here we go. Office visit, urgent care copay, $50. Okay. Max visits are 10 on this particular plan. Here you got an out of pocket though that's $9,200. So let's try and cover that $9,200 with one of my gap plans. Okay. ER, you go to the ER, it's $250 copay. If you know that you need hip surgery, if you know that you're going to need an MRI because you may need knee surgery, they have a concierge service that will make those arrangements for you, that will get your can't think of it, the approval for you to get that knee surgery done. They will take care of that for you. If you do not use that concierge service, it's going to cost you $2,500, okay, out of the gate. Here is 40-year-old. It doesn't matter if you're male or female. It does not matter if you smoke. For this person, the member would only pay $409, okay? The network is PHCS. If it's for the member and the spouse, it's $729. For the member and the children, it's $709, and for the whole family on this plan, the oldest person being 40, it's $969 a month. I can assure you, if this person makes a good amount of money and this person has kids, this $969 is a good number for you. The lower the premium, the higher the deductible. The lower the deductible, the higher the premium. Okay, so if this plan was $1,500, this would probably be around $399 or $300 and something on this plan. I also have it with the Cigna network, which I really like too. Okay, you have to stay in network with this plan, but you can go out of state. As long as you stay in network, you are covered. Okay, here's all the companies I deal with. We've got 20 minutes left. Did anybody have any questions that I didn't answer? I know health insurance kind of puts everybody to sleep.
Oh, no. So what about plans, like, would you have plans that would cover things like bariatric surgery or anything along those lines?
If the doctor says you need this and you get approval for it through the insurance company, yeah. What I like to do too, I showed you the short-term plan. What we do is you take a short-term plan and we build an indemnity plan on top of it. So let's take a short-term plan that's got, then they're known for high deductibles, a $15,000 deductible. Now, until you meet that deductible in that short-term plan, you're not going to get copays. But if you stay in network, you'll get discounts. But hey, let's build in that the indemnity plan that's going to pay you $125. Maybe that discount gets you low enough. So when you finally reach that deductible, all that money coming in is just yours. So it covers things, but you have a cap. That $15,000, they can't charge you any more than that. You are capped at that $15,000. Yes, ma'am.
What do you do for small businesses that would like to help get their employees insurance? And is there like a minimum amount of people that needs to be in a business?
No. I can start with 3 employees, 2 or 3 employees, if you want traditional coverage. Or I can take a look at each circumstance and I say, okay, this is best for you. So we're cutting the cost, but making sure that this person who needs the marketplace is on the marketplace. This person who's healthy is on a private plan, and you're not making that much money. Now, here's the other thing too: if you are on the marketplace, you cannot pay it, their premium as an employer, but you can give them more money and stipend them. Say this is for your health insurance.
Is there a limit to how much you can percentage-wise
No,
do that?
no.
So technically, you could give them 90% of that back.
Yes.
Okay.
Yes. There's also something called ERISA. So the employer says, I'm going to offer you health care. I'm going to give you an HSA, health savings account, and you're going to pay your premium through that HSA. I'm going to give you $650. Whatever your plan is, and you have to stay in the marketplace, you do not get a tax credit. But whatever that plan is that you pick on the marketplace, that $650 goes towards that. Now, in some places that's good if you don't make a lot of money, and some places when they make a lot of money, that's not so good. It's good for the employer because they're getting that tax benefit, but not for the employee. Okay, so that's why if it's a small group, I like to break them down and see what's good for each one. If you do a traditional group insurance, what happens is if you're healthy and you're not, you're still going to wind up paying a higher premium to cover his non-health, not healthy self. Make sense?
The group policies are expensive.
Yes, which is why we do a lot of where we're breaking them down and let's put you on a PAL plan with a short term, or let's put you on a yeah.
Okay.
What about things like vision and dental? Is there such a thing, a good thing? Is there such a thing as a good vision or a good dental plan?
So I actually myself have a vision plan. Okay, it's under United Healthcare. Myself, it's about $12 a month. There are discount programs. You could go over to America's Best, get an eye exam and 2 pairs of glasses for what, $98. I knew I had an issue with my eye, which is why I went and got a regular eye doctor. The ophthalmologist, or I can't remember which one is ever which one. I also have a dental plan that has a vision discount program. Let me tell you about dental plans. They suck. So the first year you're on a dental plan, they're not good. If you need major services, cap, pull a teeth, pull a tooth, anything like that, you're going to wind up paying 90% and the company pay 10. Once you get through past your first year, then it's 50-50, okay? But there's no waiting period. So if you know that you just need regular dental services, you just want to go in for your cleanings, and you should have dental insurance, I would get it. So this way you're protected. God forbid something does happen down the road. And I do have plans that have that, and then they cover you for your eyewear, and you get that discount.
Yeah, Blue Cross Blue Shield. They're the best ones, I think, for dental, but you have to wait 6 months.
Yeah, I've got a Best Life Dental. I've got United Healthcare's dental. I've got an Aetna dental. I like my Aetna one because it's a copay plan too. It's called, and you only pay that copay if you need a tooth or anything. So it's $500 for your major services on this particular thing. Next year though, that goes down. So it's still a good plan. It's you're going to have like $6,000 worth of on that one tooth, but this is only saying you're going to pay $500, and next year you're going to pay $250 if you have to have that again. So I like that one, the copay plan too.
So I know you said first year is one thing, and then after that, but if you're coming off a dental plan and going to
Yep. That's why people that I talk to, this woman that I'm working with now, she said, "What should I do about my dental plan?" I said, "How long you been on it?" And she told me, more than a year. And I said, "Do you like it?" And she said, "Yeah." I said, "Stay on it. I'm not going to sell you something that it's not going to be beneficial to you." Oh, here's the other thing about me. I do customer care. If you have a fight to do with the insurance company, I'm going to do that fight for you. If you have any issues with a claim, I'm going to go after the insurance company. That's not your job. You do what you do every day, and I'll take care of the rest. I definitely take care of customer care. I don't just sign you up and just walk away. Allstate, you're in my hands.
Mindy State. I love it. It's Mindy State.
Because we know health insurance sucks, and I'm going to find the one that sucks the least for you.